Hey, good morning, good evening, good afternoon, everybody. This video, we're going to go over something straightforward, something that most people use, especially when you're getting introduced into the market, and it's called support and resistance levels. And I want to show you why you might be doing them wrong and how to fix them, right? I'm going to give you a couple different examples, and then I'll try to adapt it and kind of give your mind a little clarity. So when you're looking at the market, you can see what you might be doing wrong or how to slightly improve, right? In trading, what we always want to do is get the best edge we can possible to lead us to profits, right? We want to extract money. That's the goal of trading. We want to extract money from the market. And if you're drawing these levels, or if you have some crazy misconception, or you got taught a certain way that just isn't really working for you, right? I hope this video helps out. So let's get to it. So what is a support and resistance level? Support and resistance levels are just pivot points above or below price. Somewhere in the past, you'll see where price kind of rejected and turned around. That on the bottom side or the downside, so if it's this example here, when price pushes down, right, it kind of has this like V shape formation, right? You can just see that it's rejecting something down here, and there's buyers in this level, right? There's buyers maybe thinking it's super cheap, let's buy in, and they load up and the price rejects and it goes higher. And then the vice versa is the exact same thing as the opposite. Price will push up here, and then a lot of traders that are getting into watching this market will short or exit their positions, and the market rejects. So this level here, if you extend this into the future, right, when price comes back to it in the future, right, if it comes back, people say, hey, it rejected in the past, therefore we should see a rejection in the future, and then they'll take their trades off this level, right? Same thing for the downside. But you can see if the current price is right here, the level below is called support. If the current price was here, the level above would be called resistance. I'm just going to go RES, resistance, because it's resisting breaking out of a certain level, and then to the downside, it's supporting, it's holding the price up, right? That's all it is. And so a lot of people draw these in multiple different ways, right? We're going to go into a couple different examples here, but I'm going to just be looking at those big major pivot points, right? You can just see them. You can see price pushed up here, and then this is the highest price or area that the market came to, right? So this one, if price comes to this level in the future, right? A lot of people say this is going to act again as resistance, right? Here's a pivot point, right? That pushed price all the way back up here, which is fantastic, right? That's just how the market reacted. And then price dropped very, very quickly, came to this level, and this past area that held price up or created a pivot point is now called a support level, and a lot of people are buying once it gets to this level again, right? You can see here's a pivot point, right? And then we have these smaller ones in between, and we have this one here. So there's a lot of confusion, or can be a lot of confusion, in support and resistance levels. And that's why when you're looking at a chart and you're going to trade on this time frame, what you want to do is you actually want to zoom out a little bit to give yourself a little bit of room, because if I mark out every single support and resistance level on this chart, you're going to have too many pivot points to actually keep track of, and it just builds a lot of confusion. And you say, well, we took one out, I don't know what's going on, and maybe which direction is it going. But if I say this is going to be like just a 1 minute, if I was going to say, maybe let's go to the 1 hour time frame, the market is going to look almost the exact same. But now our pivot points, right, when we draw them out, you can see here's a pivot, here's a pivot. So this area here is now acting as resistance, right? And look, it acts as resistance again. We have a pivot point, right? And then something here is acting as support. Right, now these levels, if I draw them out, right, I'm going to draw them out of my chart or with my little horizontal line tool like those, right? Those levels there, if I go back to the 1 minute, right? Look at the distance from one line to the other, right? We have a further distance to actually catch price movements within those levels. And so what you're trying to do is you're trying to watch if this level becomes support and then all of a sudden it gets broken. What happens is that level that was support will then most likely turn into resistance. So it's flipping. So you can catch moves as price pushes up and taps back into this level. You can take a trade off of here and you can go until the next support level. And if it breaks and pushes back up, here's another resistance level that you could potentially take and go to the next support level. So every single level, right, may have a reaction. Doesn't mean it's going to have a reaction. It may have a reaction. Most of the time, when people are trading in the market and trading from support and resistance, they're too zoomed in, right? Your rules for the levels are just not as clear as they need to be. So you might be trading on, say, the lower time frame, and you're marking your levels off of a time frame that's just too close, and it's creating too much noise. Right? You also might be looking at pivot points, right? You might be looking at pivot points and marking out the exact top, right? When price never actually comes back to this exact top, right? So what you should be doing, how to fix that, is marking out an area of price. You can see price pushed up, pulled back, pushed up again, pulled back. Pushed up, dropped here. So instead of saying this is the rejection or the resistance, the area that's like perfect level to go and reject in the future, what we actually want to do is you want to say something up here is causing resistance. I don't know where, but it's holding price. And therefore, price comes up and it almost gets to this area and then drops. This is a good area to look at trades, not necessarily that perfect level. So if I go to a past level, right, and I was trying to do the exact same thing, I would say, hey, price pushed up, pulled back down, pushed up, pulled back down, pushed up, pulled back down, pushed up, and then dropped from here. So the area that's causing resistance is around this level. That's what you want to do for support and resistance, not necessarily the perfect line, right? And if I move this into the future, you can see that we reach into this zone and then we have a reaction. When you're taking trades, if you were to use support and resistance, you don't want to take trades based on just the perfect tap, right? You're guessing. You're trying to call the top or the bottom. What you want to do is you want to watch the resistance or support get tapped into, the area, and you want to watch price reject off of that level, giving you indication, hey, this is now acting as support. If price was to just push up here and continue through, you would then say, hey, this resistance is not acting as resistance, but because we broke it, I can watch to see if price comes back to it and then acts as support, right? That's what you want to watch for. And then you want to take your trades as the market rolls over. You don't want to take the trades as price is pushing down, because it could do the same thing as before and just carry straight through. And then you're all of a sudden, you're the liquidity for the market, right? And there's no edge in that, right? You can just trade and gamble. But a lot of the time, when you're looking at support and resistance levels, if you were to mark out those support and resistance levels, just like I said, off every single pivot, what you can do to ease your mind is just go to a line chart, and then you're marking all the pivots, right? Here's a high, here's a low, here's a high, here's a low, here's a high, here's a low, here's a high, here's a low. Oops, sorry. There, high, low, high, low. You see how it gets confusing over and over and over, right? So what you want to do is you want to mark out areas, right? I want to see, hey, This level here is holding price. It's holding price. And then all of a sudden you see it break through, right? So now this area becomes support, right? It holds it. It's not a perfect line. That's the key in trading support and resistance. You want to find the area. One key factor in support and resistance trading is the idea of the break of direction, right? So if you're looking at price, if you're looking at price and price is coming down like this, you can see that we're on the line chart, so it's actually just showing the close of every candle. But if the price is going down like this and we're breaking structure to the downside, if we get the price pushes up like this, right, a lot of the time now this resistance now becomes support, right? There was this level from the past, right? It became resistance. Then we broke it, it becomes support. So if price comes down to this level here, you're still looking at this level here, and this is what you can call, the head and shoulders pattern. Those are the very common, right? You have the left shoulder, the head, and then the right shoulder should come somewhere around here for this push even greater, higher prices, right? But you don't want to enter as price is pushing down. Like I said, you want to watch for that rollover or confirmation that it says, hey, let's go bullish, let's get into the trade, then take the trade and allow it to run. So if we just follow that example here, right, you can see, let's start here. We push down, we had a small little kind of jitter, right? If you're looking at the market here, right, you want to see decent sized pullbacks. So there's this jitter here, I kind of forget it, right? Buyers come in, sellers, buyers, sellers come in here, and then we go up and we break. Now that we broke here, I can then say, hey, something over here is showing us we have a little bit of momentum to the upside, and I can mark out this area and this area as support and resistance, right? Those are my levels. We had a very nice pivot around here, so it's extending into the future. And look what happens. Price comes down, plays around a little bit, and then carries back up. But this is going to be just based on a line chart. If I go to the regular candles, look what it looks like, right? Price pushes down, pulls back up, pushes down, pushes back up here aggressively, right? So this area that I marked out because of the line chart, right? Like this line chart here, doesn't show the candle wicks. But we know, right, if you're studying the material from me, we know wicks have meaning. Price comes up, pushes down from here, and then pushes up from here. So that might mean you need to increase your support and resistance box a little greater, because look, price comes down, taps into the box, folds over and starts heading bullish. And now this acted as resistance. Price comes back up to it and breaks it. And now when price comes back to this area, right, it acts as support. It broke it by a wick. It does not mean it's committed. It does not mean that it's clear to take shorts. What it means is, hey, we had sellers push in here, and somewhere here the buyers step back in. So the support is holding, right? That's why you do not take a trade as price is pushing down. You do not take a trade exactly on the level and put your stop loss at a certain distance, and you hope as price is dropping, you're going to enter the trade and it's magically going to bounce perfect at your level to continue going up, right? That's what you don't want to do. What you want to do is wait for the bounce, wait for a little bit of confirmation, and then start looking for trades as it's going in your direction. Your win rate will increase dramatically. I promise. And a lot of the time, if you have a support level, price comes down, a lot of people are looking at this level and just taking trades off of it, right? So yeah, the market's going to take them out, use them as liquidity, allow the markets to the traders in this area to shift to the bearish, right? Which makes them sell, and the bigger traders will buy. So the bigger traders here are buying. Price comes back up, and then price launches, right? They got their best price. So you become liquidity if you try to pinpoint the market as it's falling, right? And then we get the bounce. And then we get the bounce again. And then we get the bounce again, yet again. But now we can go back to that area and say, hey, this area is holding price. Now we've got the commitment through, right? Now I can look somewhere within this movement for levels that will become support, because this overall level became resistance, right? Or it was resistance, now it broke. And you can see price pushed up, pulled back down, push up, push back down, push up from here. So we have a little bit of an area here, and then there's buyers within the wick here. So they're large areas. But the accuracy, look at this. Price taps into it, reverses, and goes up from here. So imagine catching a trade here and being able to hold and hold and hold and catch a move that's 150 to 200 points, right? It sounds like magic, but it happens all the time, right? The market is fractal. So I want you to just remember that whatever happens on the lower time frames, it happens on the higher time frames and the even higher time frames. So if I look at support and resistance based on specific areas, right? Just like this example here, I'm going to clean my chart. We see that price pushes up, pulls back down, and then breaks, right? This area, right? Because it broke, look, it came back and hit this level and then rejected off it. So resistance became support. But because I'm on the 1 hour, if I go to the 4 hour, let's find that area. All right, what still looks like a pivot point. Let's go to the daily. Oh, where's my levels? Here. I want to make sure that we can see these on all time frames. Daily. Look at this. This little area that we drew the pivot points, right, is just the wick on this one daily time frame candle. So you can see price pushed up, pulled back down, closed, open, dropped, pushed bullish, and it broke the previous candle's high, right? So if price comes back to this level, you can say this is going to be most likely a support level. Price breaks another high, it becomes support. Price breaks another high, it might become resistance, right? Price broke this candle with a wick, pushed down, closed bearish. The next candle pushed up here and became a greater, right, bullish candle. And look what happened. Price broke it, came down, tapped into at least our support level, and rejected off the support level. Right? So if I just look at this one, because it's a really good example here, right? Price came back down and dropped. If I go to the 1 hour, look, this is a pivot point that broke, became support, became support, became support, right? Multiple areas to take trades, right? You want to combine this. If I throw on a very, very simple moving average, oops, can't use that one. EMA, let's just do EMA cross because it's the most simple indicator that you could use. There's 4 indicators here. I'm just going to turn these off and I just want to use 2, and I'll go 20 and 50. Right now, by pairing your support and resistance levels with something like the EMA, you add an edge on top of that, right? So you're going to gain a little bit of I guess you're going to gain a profitability edge, right? So what you want to do is say, hey, if we bounce off this support level, right, and then start pushing up, we're in the direction of the EMAs, right? I can then look for longs. If I go back in the past and I say, well, this level here, right, was going down or caused price to go down, it was support, but it broke and became resistance, right? Just because we tap onto this level here that was support, but it became resistance, so therefore it's resistance. If I were to take a trade here and I was expecting a very large move, right? Look at the overall trend in this area. The trend is actually going up. So yes, the trade goes in my favor, but I end up getting a stop loss, right? And this is what people mostly do. They take trades that are against the trend. I want you to remember in every single video that I do, the trend is your friend. You want to find a trend. So far, the trend is against you, right? So no trades. If I waited for this level to get tapped and price rejected like this, what I would say is, okay, we have some sort of seller coming in the market, they're acting as resistance. I look to the left to see where support might become because I want to see where's the battle happening. And you can see price comes down and it rejects here. So it's actually rejecting off of this area. Buyers come back in. Are the sellers here? Do they want it from here? Price pushes down. It does not break a previous low. It actually goes up. Right? So pairing the EMAs with your support and resistance levels, watching how price reacts off of a previous level, right? Because if I'm going to sell, I want to wait for this area here to show that the sellers are in control and then take trades afterwards. But so far, the buyers are still holding. So I don't want to take it. So you actually mitigated a loss. If we go down to this level here, right? We look at this lower area to show you what happened, right? This area here, we must have tapped into something in the past. If I go to a higher time frame and just look, oops, right here is your support that's getting created. I'm going to extend this left and we'll just look to the left. All right, so there's really nothing here that's clear to me, but if I look a little further, here's a good resistance level. So resistance, small resistance. Now resistance here becomes support. Go to the future, it becomes support. Then I drop to my lower time frame that I was just on prior, and I do the same reasoning. I look to see, hey, what directions the EMAs are in. Well, they're bearish. Price comes down. Was I on the 15-minute or the 1 hour? I'm not sure. But this actually looks like I probably was on the 1 hour. There we go. That looks better. Price comes down, holds. So there's a little bit of seller here, right? Buyers, sellers battle. Sellers push price down even lower than before, right? Is this level becoming support? Is it showing me signs of support? Well, no, because we just had this area actually break. Then we get the price push up here, right? It's reaching to this level of resistance, right? So let's go there. Make this nice and visually appealing here, right? So we have support, resistance, support, it's holding, resistance, support. There we go, we got the break. Now resistance is failing. The EMAs here are bearish, so taking a trade going long is actually going against the trend. It's not the most likely trade, but because we had that battle based on a larger time frame zone, we're getting a little bit higher of an edge over and over and over. And now, if you notice, if you think of your own trading, please do this in your own trading. If you find an area where you want to trade, if you see price hit a level that's support or resistance, don't take a trade right away. Wait a little bit, right? Because you're not the only one that finds that level to be support or resistance. What you want to do is wait. So this would not be a long trade. This would not be a long trade. This would not be a long trade. But because we have the push up here that broke this resistance, now this level becomes support. So when price comes back to it, right, I have much better odds of taking a winning trade than a losing trade. And if I just do a 1-to-1 right here, I just 300 points to 300 points, right? You manage your risk appropriately. That's a really good trade. Price pushes up, pulls back down, breaks. So now Resistance becomes support, right? Price pushes up, pulls back down, breaks, right? It became a little bit of a support here. It didn't actually retest, but then we get up to our higher level here. So you're building the story one step at a time. Yes, that might take a while if you're a larger time frame trend follower or trend trader, right? A swing trader. But that's how I suggest you trade, because you have more than one confluence. You're not willy-nilly on these levels. And the funny thing about this, I'm going to say a joke or show you a joke, and then I'll let you go on your way. If I was to look at the 4-hour time frame and just do this, right? I'm not going to look at the screen. I'm just going to go horizontal line, 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 line. I'm not looking at this as just willy-nilly lines. If I draw support and resistance levels just like that, right? When you look at these levels, look at this. We're seeing a little rejection, right? Price comes down, rejects off my level. Comes up, consolidates around my level. Pushes up, consolidates around my level. Comes back to my level. Pushes down, comes up, comes back, rejects off my level. Rejects off my level, bounce, bounce. Push down to my level. Look at this pinpoint trade. This is where most traders are just saying they're such amazing traders. When I just randomly drew lines on the screen and I can say, hey, my level here, I got a pinpoint trade, perfect trade, or a perfect spot for an entry here, right? I look like I'm a magician. I look like I'm a wizard, but overall, it's the silliest thing that you could do. Support and resistance levels are everywhere. Pair them with other confluences. Use multiple time frames. Don't go close to your entry time frame, and you'll trade a lot better. Good luck, good trading, and we'll talk to you soon.